So welcome everyone. Today we are joined by Kari Overson with Overson Investigative Group. And Kari's going to be talking about the top 10 things that federal government contractors should know to avoid fraud. We want to thank Kari for joining us today. It's April 22nd, 2021. And I want to share a little bit more about our guest speaker today. She has over 26 years of experience investigating various federal and state crimes with the U.S. Small Business Administration, the Office of Inspector General, and the U.S. Department of Energy Office of Inspector General. Her complex fraud investigations included bank loans, disaster loans, contract fraud, real estate, false statements, false claims, bankruptcies, and money laundering. So we're excited to have Kari join us today, and please ask your questions as we go, and we'll go ahead and turn it over to Kari.
Thank you, Tiffany. Thank you, Trina. Okay, so as Tiffany mentioned, I'm retired from the Small Business Administration Inspector General's office, actually 2018, and I opened my own private investigation and certified fraud examination firm here in the state of Washington, and focusing on the same type of frauds, same type of crimes, helping businesses that have been accused, but also helping those others victims who are being defrauded by other businesses or people. So wide range of experience for you, but feel free to interrupt with any questions whatsoever, because it's just a much more pleasant and informative presentation if I get questions. So I'm going to talk about two main types of fraud: occupational fraud and organizational fraud. Occupational fraud is the fraud that's committed from within your organization by your own officers, directors, or employees. And it's an attack against the organization from within. The organizational fraud, which is what you mostly came probably to hear about, the fraud in government contracting, is committed by businesses usually, or by individuals within the businesses, but they consider it committed by businesses and the government. So occupational crime involves legal offenses committed by individuals in the course of their occupation. So this first part, I'm going to kind of talk to you about some of the types of fraud that occur within the company, and because I think that's also really important. And so the Association of Certified Fraud Examiners is the global leader in anti-fraud training and education and professionals. So it's global. You would not believe where all the certified fraud examiners are. And they do a report to the nations every 2 years, and it consists of 2,500 cases in this case for the 2020 report to the nations. 2,500 cases of occupational fraud that were investigated between January 2018 and September 2019. So this is where the certified fraud examiners submitted this to the ACFE and said, this is what we're seeing out here in the field. And so some of these are pretty interesting stats here. The typical fraud case lasts 14 months before detection and causes a loss of $8,300 per month. And we'll get into that because not all frauds are that high, correct? But that's, I think, your average or median cost per month. So your asset misappropriation schemes are the most common, and that's your theft of cash and products. Financial statement frauds are the most costly, and those are committed by owners and executives on the financial statements. So the accountants are told to leave things off or add things in, understatements and overstatements on the financial statements. And that's only 10% of the cases, but look at that median loss of $954,000. So CFEs estimate that organizations lose 5% of revenue to fraud each year. So when you think about your company and you think that your profit's only maybe 10%, your profit might only be 5%, depending on how short a profit base in your industry, and you lose 5% of revenue to fraud a year, that's really costly. Most of half of occupational frauds came from operations, accounting, your executive and upper management, and sales. And owners executives committed only 20%, but again, they accounted for the largest losses, as you see there, 600,000 for owners and executives. That's because of the financial statement fraud. It could also be other fraud, which we'll talk about in this conversation today. And then certain fraud risks were more likely in small businesses than large, and that's your smaller frauds, your billing fraud, payroll fraud, and check and payment tampering. So the three primary types are asset misappropriation, and that's your employee theft, and corruption, bribery, conflict of interest, extortion, and financial statement fraud. Excuse me. And those are material misstatements. And I don't know if you guys can see the screen very well, but it kind of shows how everything breaks down. When you have like corruption, what does that mean? Conflict of interest, bribery, illegal gratuities, and economic extortion. Financial statement fraud, that's your net worth overstatements or net income overstatements or your understatements in the same category. And then your asset misappropriation. So you have the theft of cash, you have the theft of inventory, and how all those break out. Fraudulent disbursements, theft of cash receipts, theft of cash on hand, cash before it's put into the books or after it's put into the books. And one thing you should know, and we'll get into this too with the organizational fraud, but fraudsters don't usually just do one type of fraud. And so as you see here, look at these areas of overlap here. This is where they're doing more than one type of fraud at a time. So there's corruption, there's asset misappropriation in here, there's financial statement fraud. They're doing more than one fraud at a time. And you'll see that a lot in the examples I'm going to give you later in the organizational fraud. Much like as a police officer, we were law enforcement, and you find one knife on a person when you're frisking them, you're going to find another knife. Things like that, you're going to find another weapon. Just the same, when we're doing a fraud investigation, when you find one type of fraud, you're generally going to find other types of fraud. It's pretty rare when there's only one method of attack. So how occupational fraud is concealed? Basically, it is we either created fraudulent documents or we altered them. And so, or altered existing documents. So it could be electronically or it could be by paper format. So that's virtually what it amounts to. Mostly, those are the top 4 concealment methods. But then some people, 12% didn't involve any attempts at all. They just kind of took advantage and just said, oh, this looks like a good loophole. Nobody's looking. So I'm just going to go ahead and do this, and I'm not going to try to conceal it. Detection, 43% were from tips. So 50% by other employees. So employees are like, wait a minute, something's going wrong here. And they turn in their coworker. 22% by customers. Hey, you overcharged me, and this occurred. 15% anonymous and 11% vendor. And then your internal audits, 15%. I'm actually pretty surprised that it's that high, because a lot of the internal audits, they look for ways of fixing the books to say, okay, what's wrong with this? What's wrong with these financial statements or whatever? Oh, we see an error here, but they don't know to go the next step and look for that fraud. And so luckily we're getting more and more auditors and accountants certified as fraud examiners, so they can focus on, hey, that doesn't just look odd, that is odd, and that we need to look further into that, because that's probably fraud. And then we have management review too, very important. I just throw up this slide for schemes by industry, and I just want you to see, I put some arrows here for government and public administration, manufacturing, construction, and technology. I don't know where all of your industries fit in this category, but look at corruption. Look how red that looks all the way down every category. So we're going to talk a little bit more about that here. Okay, internal control weaknesses. It's the lack of internal controls accounts for a lot of ways that people can commit frauds, because there's no internal controls to stop them. Then you see the override of existing controls because the person has worked for them for a long period of time. They trust them. Oh, yeah, that makes sense. And they just sign off. So no, let's just go around that. We don't need to pay attention to that internal control. 18% of the crimes or the cases that they talked about, those 2,500 cases, 18% because they overrided the existing controls. Lack of management review, 18%. This is why you as owners need to know what's going on in your company and need to be paying attention to what's going on. And poor tone at the top. If the employees see that the executives don't care, the managers don't care, they want to look the other way, think of Wells Fargo, then they're going to start committing fraud at the bottom. We don't care how you do it, just do it. Yeah, the poor tone at the top can account for that. And I'm surprised it's only 10%. Actually, no, I guess I'm not surprised, but the poor tone at the top, I bet you, is going to account for more of the losses. I haven't seen that graphic to see if the poor tone at the top was along with those financial statement fraud overlaps that we saw. And then the lack of independent checks and audits. And then losses rise with the level of authority, which I did already mention to you guys, that the managers and executives, that the losses went up. So if you look at this figure, so here's 41% of the cases were employee cases with only a median loss of 60,000 only. Some of us can't afford to have that much loss in our corporations, right? Or in our companies. Managers, 35% of the cases, $150,000 loss. And then here's your owner and executives, only 20% of the cases, but look at this, 600,000. Again, a lot of that is because, a lot of that is because it's financial statement fraud, which can really impact what's happening with the companies. And then the longer the tenure, the higher the median loss, because it goes on and on and on. So tenure, in terms of tenure, is the person's how long they've been there. So at first they might test the waters with a little bit. I'll just steal $5, and then I didn't get caught, and then they're going to try something more. So the longer they're there, the longer the higher the loss. That makes total sense to me. But if you have any questions, let me know. And then losses with position and department. I'm just going to throw that out there. Tiffany will have the slide deck. But, operations, accounting, executive upper management, those are the most cases there. And look at these amounts. But then look at this board of directors, 750,000. I know as small businesses, we generally don't have boards of directors. But, and then look at research and development, $350,000 median loss. And then, of course, the executive and upper level management, $596,000 loss. So here's some of the 7 key warning signs that they found in these cases. 42% of the perpetrators were living beyond their means. 26% had financial difficulties, which I will kind of lump. I'm not sure how they kind of separated, but divorce and family problems. Usually these two kind of go hand in hand in my eyes, but just keep that in mind. 19% unusually close relationship with your vendors. And 15% control issues, unwillingness to share duties. I don't know if you know, but some of the victims of fraud have discovered that their most trusted long-term employee that never took sick leave, never took a vacation, those were the ones that were committing fraud. It's that control issue. It's the unwillingness to share duties. So you want to be careful. It's not that you can't trust your employees, but you really want to make sure they take their leave and really look at what they're doing. Just make sure you know what they're doing. Because that's where we see those control issues coming into place. It could be a warning sign for you that there might be a problem. And then some people are just like that. So 13% irritability, suspiciousness, defensiveness. Remember, they will speak out about what they are doing, but they will accuse someone else of doing it. So you know what I mean? I'm not thinking the right term to say that, but just think of that as a warning sign. And then of course the wheeler dealer attitude. So what you can do for internal crimes, for the occupational crimes. Separate out your duties. Make sure there's that separation of duties. So no one person has sole control over the lifespan of a transaction, is really what that means. No one person should initiate the transaction, then approve the transaction, record the transaction, reconcile it, handle the related asset when it comes in the door, and review the reports. There should be 2 sets of eyes on each of those, okay? Have payments go to lock boxes. So less hands touching it. But know what's going on in your organization. Know your employees and listen to what is affecting them. And then, of course, you can set up a hotline or reporting system for tips, because remember how many percent, what was that, 50%, 45% came from tips from other employees. So they know what's going on. They see it and they don't want it. You know, they like the companies and they don't want fraud committed against the companies. So here's where we're going to spend most of our time: organizational crime. Sorry, I get excited about fraud. I get excited about investigating it and putting an end to it, and helping out the victims of fraud. So organizational crime, remember, it's committed by businesses, particularly corporations, and the government. Yes, the government does do that. When you're talking like bribery and kickbacks, okay, the government's involved. So we'll focus mostly on this. We're going to talk about size and affiliation, false statements, percentage of work or limitations of subcontracting issues, false statements to enter the program, to enter any one of the programs, surety bond fraud, bribery and kickbacks, non-compliance with subcontracting plans, which I know affect a lot of small businesses as subcontractors, the bait and switch there, product substitution, bid rigging, and loan fraud. I'm going to talk about loan fraud because it is a big deal. Okay, so size and affiliation issues. Did I miss number? Yeah, number 1, sorry. Number 1, it's supposed to let me go backwards. Number 1 was your internal fraud, okay, your occupational fraud. So number 2, when we're talking top 10 things, size and affiliation issues. So this is the false statements to enter the program. Sharing addresses, personnel, and management with contractors, and creates an affiliation issue, and therefore might be in a size issue if you're dealing that with a larger business, right? Failing to disclose other personnel and income will affect size and affiliation. So here's a case study, OnPoint.gov, Inc. There were several companies affiliated through common ownership, and the subsidiary, OnPoint.gov, Inc., submitted government contract bids and said it was a small business. So the case resulted in the conglomeration of OnPoint companies paying $5.8 million for misrepresentations relating to its small business status, because they were not small and they got a multitude of amount of contracts. I don't have that number handy. I should have had that handy. And so they had to pay $5.8 million. What happens in these civil cases under the False Claims Act is the government can go after contractors for treble damages. And what that means is, let's say I got $1 million because of my fraud I committed against the government. So the government can go after those contractors for $3 million. So that's treble damages, the amount of the contract times 3, because the amount of the contract is considered the loss to the government. Trina, was there a question? Or are we good?
Well, I was going to ask, in like this particular case, how did they find out? Was it a protest, or how did they find out that this company needed further examination?
It wasn't a protest. I think either, oh gosh, and I worked this one. My memory sucks because it takes a long time to investigate these cases. This was a False Claims Act case that either came to us as a KETAM, which is a case where somebody knowledgeable about the fraud comes forward and says, hey, government, these guys are committing fraud. And they do this under through the court system. They file it and it's sealed. So only the government and they know that they filed it. And they say, hey, government, we know this is going on. These guys are big. These guys are not small. And here's the proof we have for it. And here's what we think happened. And then the government moves forward with it. And then whoever brought it forward, who's the relator, gets to share in the proceeds. So that is one way of doing it. I don't think this one was that. This might actually have been ultimately a self-disclosure. I don't remember, and I'm sorry that I don't remember. My memory can sometimes go once it's gone. You know, once the thing's over, I got to move on to other things. So there's only so much room in my brain, apparently. But this could be a competitor. This could be like you say, a protest. It could be. I don't remember on this one. A couple of them, as we talk about in future, I'll point out they were key TAMs, and that's something you guys should think about as you go along. That if you're aware of other fraud, that might be an avenue for you to report it and get some of the proceeds because you lost to some of these contractors. You know, all these times that you lost to that contractor and they shouldn't have been in the program at all. Then I need to be reporting that, and maybe I can get some of those losses back by sharing in the proceeds. Okay.
Noted.
I'm sorry, I talk a lot. I talk really fast, so please stop me or slow me down if it's too much. But that's a really good question. I'm sorry, I don't remember the answer to it. Okay, so number 3, percentage of work. So I just verified these percentages, but if I'm wrong, please correct me, because they don't generally change. They change the way they word it and the way they compute it. But if you've got a service or supply contract, you should be doing 50% of the work. 50% of the cost of manufacturing for supply contracts, 25% of specialty construction services like roofing, 15% for construction. You've got to do the work. Don't just hire the project manager from your large sub and just say, oh, that's our work. No, do the work. Do your percentage of work and document it. That is where a lot of firms get in trouble right there. Now, remember the newer rules where you can use similarly situated contractors as part of your percentage. So you're a woman-owned small business and you're in specialty, you're roofing. I'm just going to say roofing because that comes to mind quickest. Then I can use other woman-owned small businesses to complete that contract with me, okay? As long as they're my first tier subs only. I can do that, and that can still be considered performing my percentage of work. So that's the newer thing. That's not, when I was doing most of my investigations, that wasn't allowed. But luckily that's allowed now. And if I misstated that at all, you two step in and correct me, okay? Or anyone else who's listening. But that's the way I understand it happens now with percentage of work. And I'm going to get into a couple examples here.
Kari,
Yes.
can Jackie with Skanska says under CFR 4926, which is the transportation area of the CFR, businesses must fulfill 30% of the work.
What kind of business?
Well, Skanska, but CFR 49, if I'm right, Jackie, that's where the U.S. Department of Transportation DVE requirements live.
Okay, so it's separate from the other SBA rules on that. I'm glad to know that. So it's 30% for what type of contract?
Yeah, Jackie, feel free to chime in.
Transportation?
Yeah, I think it's going to be U.S. transportation funded. So it could be anything underneath that umbrella is from what I get. I assume she's typing now. I also had another question, so maybe we can come back to Jackie if she comments further. We've had instances with large primes, say at Hanford, which some of those companies are quite large, and they might have third and fourth tier subcontracts underneath them. And we're wondering how often how far does the flow down of limitations on subcontracting go? Or does it at all?
It doesn't. It doesn't. So the only that similarly situated would work for me as a woman-owned or for a service disabled vet. You know, that only goes first tier. Any beyond that, no, you don't get to count that as your percent of work. But for out there at Hanford, it is what it is. It's 50%. The problem is at Hanford, it's, DOE makes so few contracts itself. These are all subcontracts. And so it's more probably the subcontracting plans. It's the false statements by the subs that they are this status, they're that status. And we've had several cases, as you know, at Hanford where the prime knew that these subs were not in fact woman-owned and that they were being run by larger companies. And there's been a lot of examples of that out at Hanford, unfortunately, and I'm sure the other sites as well. Yeah, the percentage of work should still apply. Yeah.
Okay. And Jackie is unmuted. We can go back to that CFR 49.
Yes, please, Jackie.
Jackie, you're there. Are you there? Oh, we had you, Jackie.
Can you guys see?
Oh,
Can you see me?
we sure can.
Oh my gosh, I cannot see anybody. I feel like totally lost. Good afternoon. I mean, I think this is such a great presentation, and I appreciate Tiffany for putting this together, because I do contract compliance at Skanska, and I am having a hard time.
Jackie, we lost your audio. Oh, we lost her altogether. Okay, sorry, Jackie. We'll try to catch you at the end. But if you want to go ahead with the next slide there, Kari.
Okay, and if she wants to talk later or stay a little later, we can chat too. Yeah, I'd be glad to. Okay, so here's an example. Jacksonville contractor agrees to pay $500,000 to settle the False Claims Act liability. So this is Sunrise Systems of Brevard. And what they did is they had a NASA demolition project, and they partnered with a minority-owned small business, but they did all the work. So they got the set aside, or they violated the percentage of work requirements. The government alleged that Sunrise performed nearly all the work on the joint venture and received nearly all the profits. So they did not do the proper percentage of work that VNR did not. So $500,000. So that's a large fee. Here's another one. This one was really interesting. This did come through a key tam, by the way. So I'll throw that out there. This again is where the relator comes forward and says, hey, I know about this fraud, and here's my proof. The government goes forward and investigates and finds that it is. And so this U.S. government got $928,000, but the relator also got a percentage of the award and got his attorney fees paid as well. And so what happened is Sayaz Construction had a mentor protege agreement with Okland. But Okland did all the work. They prepared all the bids for the 8A contracts, used all of their own employees, for project managers, submitted invoices. The guy at Sayaz, I can't remember his first name. He was pretty much the guy with the tool chest down there that really didn't get to come in and actually do any work. He was just there in name alone. And so then he realized at the end of the 8A contract, hey, I don't know what I'm doing. I can't go get my own contract. I've got no experience now because they did everything. So he brings us forward, and he was able to settle or get some of the proceeds from this settlement. And so they represented to the government that Sayaz did its percentage of work with its own employees, and that was not the case. So there's a good example of what not to do. Make sure you're doing your own percentage of work. So there it is, 928,000. Okay, number 4, false statements to enter the program. This is the main thing that SBA focused on, SBA Inspector General's office focused on. So we would work jointly with various federal agencies to investigate crimes. So we've got, when somebody makes a false statement to get into one of the programs, whether it's woman-owned, HUBZone, service disabled vet, we would come in and look at the eligibility, and these other Naval Criminal Investigative Service, Air Force OSI, these guys would come in when it was their contract and work with us. So some of the ways we charged that were wire and mail fraud, false statements to the government. And just so you know, lying to a federal agent that comes out to interview you in relation to this, you can be charged with that as a separate crime. And so we actually ended up, some people pled guilty to that, instead, because they lied to us initially. and you know, whatever. So they were able, we would add on that charge in addition to the other crimes committed. So failing to disclose affiliates, revenue and assets, revenue for size purposes, principal place of business and employees for a HUBZone, death of the disadvantaged individual or the owner on whom the entry is based, criminal history, prior suspension, debarment, you name it. If you lied about it and it was a material fact that the government would have done something differently had they known the correct information, you could be charged with false statements to enter the program. And again, those false statements can be made either through by wire in your SAM reps and certs or by mail. And so we can charge you either way. Sorry, I'm acting like I'm still there with the government. The government can charge you either way. And there's a litany of types of charges that they can charge for these things. So let me give you a couple examples. This is an example of transportation contracts. Elaine Martin, she entered the 8A program in Boise. She provided false information to get into the program, so her net worth looked less than it was. So she got into the 8A program, and once in the program, she continued to provide false tax returns that showed her net worth was below the required limit to remain in the program. If she had disclosed it, she would have not received contracts, and she obtained over $40 million in contracts. So at 69, she was sentenced and she got 58 months in prison for her contract fraud. Look at that. And not only that, but while she was waiting between her plea agreement and her sentencing, she was out trying to sell some of the assets she didn't disclose in her net to the court. So she continued to lie about her assets. So she's out selling jewelry and artwork that she had put in her son's name. And so the court was obviously not pleased with that. So because otherwise I can't imagine a 69-year-old getting 58 months in prison. That just doesn't happen. Idaho is a great place if we're prosecuting. They're really good about prosecutions over there, whereas in Seattle, you probably get away with more. Sorry to say, it's the way it is, you know. But another example I'll show you later, in Idaho, the guy got nothing. And so you just never know, but she ticked off the court enough and got enough in contracts that she received 58 months. So actually it says she was sentenced to 84 months. I think, she was, convicted of tax and fraud charges. I don't know, but she pled guilty and she got her the 60 months. So she was able to get a reduction. So she had to pay Idaho Department of Transportation $131,000 because she was pulling out the guardrails and not disclosing the income she was receiving from those guardrails. So she wasn't disclosing it as some offset to the contract. So she wasn't disclosing it to the contract. She wasn't even disclosing the receipt of that money to her accountant, and therefore not disclosing it to the IRS or the SBA. So that was an additional problem. And she forfeited $3 million. So that was a big one. Here's another one, a woman owned. So here's where the prime and subcontractor, and this might go into what Tiffany was asking about out at Hanford, you know, a lot of prime and subs, right? And this might affect Skanska. So what happened is UFC certified to Lockheed and Boeing that it was woman owned, okay? Lockheed certified to the Air Force that it was awarding these subcontracting dollars to a woman-owned small business. And that was before all this certification program, okay? But the KETAM, again, this was brought by a relator that said, hey, there's fraud here. It revealed that Doug and John Davis controlled the trust, which owned UFC, and not the mom and daughter that was represented on the woman-owned small business paperwork and on the company paperwork. And it showed that they had the power to remove the wife and daughter, which we know would not be allowed under the woman-owned or any of the programs if there's eligibility based on people. So, but we revealed, the emails revealed no control or decision-making by the women, which we know is also a requirement for a women-owned small business program. So what happened in this one, U.S. attorney filed and settled it, $20 million that they had to pay for their false statements that they were woman-owned small business. So I don't know what amount of contracts they had, but wow, $20 million, that's a settlement. So that's, they worked out that deal, which means the fraud was probably much greater. Here's another study. This one I worked, and when I talked about overlap, here's your overlap. So this was also in Idaho, and Patrick Large was losing a lot of his roofing contracts to service disabled vet out at Mountain Home Air Force Base. And so he had a service disabled veteran working for him doing roofing. So he says, hey, Michael, I'm going to set you up in this service disabled veteran owned small business. I'll run the business for you. Don't you worry. And you'll get you'll get, you know, your profits, and I'll do everything for you. Michael's like, what? That's fine. Michael couldn't really even read or write. Okay. He was just, he's a very smart roofer, did really good job roofing, but he couldn't really read or write. So Patrick led everything. Patrick also set up one of his bookkeepers, Lisa Hatch, as a 8A person, because her whole family, the males, were all in the construction business, and so, and well known in Idaho. But so he got her set up as an 8A contractor, Construction Service Corporation. And again, he ran most of it. She did do the books for her own company, but he made the decisions and helped with the you know, the bidding and all of that. And then through the 8A program, they obtained a lot of assets through the sharing of assets that the 8A program allows through the surplus property program. So over $1 million original value. We know that the value is much less by the time it goes out the door, but it was $1 million value original of the assets that they got through the surplus property program. And then he said, you know what? My farm's in a HUBZone, so let's put your addresses for your businesses as my farm address so we can get HUBZone contracts. So they did the 8A, they did the service disabled vet, and they did HUBZone on both companies. And so they received a total of 1.6 million in contracts based on just the HUBZone alone, and that was the one that the prosecutor thought was the strongest, so that's the only one he actually went after them with. We had some problems with the 8A side of the house because one of the government contracting officials said, I didn't care who got it. I just needed Patrick Large's company to do the roofing because I needed metal roofing and they're the ones. So I didn't care how I did it. So we had to drop the 8A contracts because of that. So anyway, I'm probably giving you too much, but he pled guilty to wire fraud. And even though the amount of money, $1 million in property, $1.6 million in contracts, he only got 2 years probation and was ordered to pay a $20,000 fine. McDonald and Hatch were both, you know, seen as lesser kind of victims, but perpetrators at the same time. So they pled on behalf of their corporations, which were sentenced to 3 years probation, and of course were debarred. And then they paid $65,000 and $5,000 for their fraud. They got off really easy, but you know, this was a task force of, I think there were 7 agencies on board because there were so many different contracts, and all of us were affected, along with IRS worked this with us. So that's where the overlap can happen. It can really snowball. And GSA gets involved even if there's not a GSA program. So even if the surplus property hadn't been involved, GSA can get involved because all the reps and certs that are made in SAM are made to GSA. And so they can get involved for the wire fraud associated with the false reps and certs. So here's another HUBZone case study. The incumbent contractor Lusk learned, hey, its contract is just going to go to HUBZone set aside, much like Mr. Large. And so he incumbent set up a HUBZone company called Commonwealth, and Commonwealth won the set aside contract. But there were some red flags here. Commonwealth was co-located with another business. They didn't have a legitimate lease. They borrowed employees and equipment from Lusk. And then Lusk paid a receptionist from the co-located business to answer phones for Commonwealth. So we have all these red flags. We got a criminal, I wasn't part of this, but there was a criminal conviction of the party that certified to the company's the principal place of business for HUBZone purposes. The debarment of that same individual And then there was a False Claims Act settlement the company had to pay of 6.25 million. So we can go, this is a good example of criminal, civil, and administrative violations and handling things globally, criminally, civilly, and administratively. And that's what the government tries to do now, because sometimes a criminal conviction doesn't mean anything to someone. It's the debarment that matters. Sometimes paying out a huge amount of money for civil settlements doesn't matter to them as long as I'm not debarred and I can continue operating. Okay. So they try to hit them all if possible. Okay, 6.25 million. This one was an interesting one. This was false statements by wire because surety bonds. So what happened is John Hawley was the owner of PBI Construction out in Spokane area. And so he made false statements to the owners of the public works contracts. I think it was the port out there at Tri-Cities, stating he had paid his subcontractors and suppliers when he hadn't. He made statements by U.S. mail to the surety company that they were out of funds, which actually he had diverted to his own use, $87,000 he had diverted to his own personal use, thereby depriving the company of being able to pay its subcontractors. And then he lied to a federally insured financial institution for his mortgage. Again, when we talked about people committing more than one type of fraud, this is a great example of that. And then he lied to the SBA to obtain guarantees on these surety bonds. And SBA suffered a loss of over $500,000 due to that. So why is that not? There we go. He was charged with false statements to the government, which is 1001. False statements on a loan application, which is 1014, and mail fraud, 1341. He was only sentenced to 30 days and had to pay restitution of 197,000. They were both debarred for 3 years. Bribery. Interesting. Bribery refers to the offering, giving, soliciting, or receiving of any item of value as a means of influencing the actions of an individual holding a public or legal duty. So the solicitation of a bribe constitutes a crime as well. So when the government official is asking the contractor and says, comes out to you and says, I need some money to give you this contract, I want to give you some advice on dealing with that. You kind of hedge your bets, say, oh, I got to think about this. And then you call your lawyer and you call the appropriate law enforcement, and then we get it on tape. So we can show that you had no part of that, and we'll get it on tape. And on tape, that shows you how old I am, doesn't it? We'll get it recorded, and we'll show that they are the ones soliciting the bribe. So anyway, that's just an aside, but I just wanted to throw that out there. So kickbacks are also one of the bribery and kickbacks. So it was passed to also deter subcontractors from making payments and contractors from accepting those payments for the purpose of improperly obtaining or rewarding favorable treatment in connection with contracts, with a prime contract or a subcontract. So let me show you an example. We had a case down in San Diego. One of my agents worked called Kickback Mountain, and I did not invent the name. That's a military. They are really good inventing names for cases. Kickback Mountain. So we had 2 prime contractors in the 8A program. We're doing, they solicited and received kickbacks from subs in order to award them subcontracts at Camp Pendleton. So one of those principals received over 539,000 kickbacks to himself, his son, and his daughter, and the other received 94,000. And it also uncovered bribery payments to 2 public officials, one of whom was a Navy contracting official described as the godfather of Camp Pendleton. And he accepted over $100,000 in bribes from these contractors. And then there was a GSA contracting official. He demanded $120,000 in exchange for an 8A contract. Luckily, they went to give him some of the proceeds and arrested him when he received those proceeds. So this was this was just an awesome case. We had a lot of pleas of guilty from all of the subs along the way, as well as the 2 prime contractors, and then the 2 government officials as well. So that was a huge case for the government. And again, this shows that a lot of agencies will get involved because a lot of agencies were affected, right? We had Navy contracts, we had defense contracts outside of the Navy. So we have Defense DODIG here. We have GSA because of false reps and certs, but there might have been a GSA contract. I'm trying to remember. IRS, because whenever there's money, there's usually money laundering or there's tax evasion, right? So we had IRS involved as well. And in this case, they did lie on their taxes as well. I think these two officials, if not the two primes, the individuals themselves were lying on their taxes because they received this money and did not disclose it on their tax returns. And then FBI gets involved a lot with bribery and kickback cases. So here's another one that's not, it doesn't happen enough. And here's one, we mentioned Hanford earlier, and I think about this based on my experience at Hanford. But you see a lot of primes that, you know, they say, this is who we're going to use. We're going to use these small business subcontractors. And then once they get the contract, they use somebody else entirely that may or may not be a small business, right? So now they're trying to get more compliance with the subcontracting plan. They're trying to hold more people accountable. There's been a couple court cases that have made it so the primes now have to pay money back to the government because they got extra award fee by following and adhering to their subcontracting plan and awarding subcontracts to small businesses. And so the rules should help with the small business subcontractors being able to do more of the subcontracting. So, you know, when they approach you to say, hey, can I use you on this bid? You know, yes, we'll use you in the contract, and then they switch it, then you might have a little recourse, or at least know that the government might be able to go after them for that. So here's an example of Tran versus Computer Science Corp. So CSC set up a scheme to subcontract work to small businesses, which in turn would agree to further subcontract to the large business that CSC said, you need to hire this firm to do the work. So this pass-through scheme violated several provisions of the False Claims Act because CSC reported, hey, we are meeting its small business subcontracting goals, when they knew, because they set it up that way, that in reality, the large businesses were performing the work. Okay, so these cases are starting to come out. This was actually a 2014 case. I don't know, I didn't look for a more up-to-date one, but I'm hoping that these will start coming out more and we'll start seeing a little more use of subcontractors the way it should be. Here's one, product substitution. So the easiest way is when you think of made in China versus made in the US, right? Where Buy America Act says your product should be made in the USA. Most of the contracts state that, unless for some reason there's a weird type of item that's not made in the US. That's the easiest way, is they substitute and they change the labels to say made in USA, or they just change the packaging and they don't even bother with the product. You know, it's weird. You've seen some really weird cases come through. Or substituting inferior or lesser cost items like office supplies. We're paying for a name brand and yet we got less than name brand. So we paid more money and we got less than what we ordered. Okay, so here's an example of that, was Aventura Technologies. They falsely claimed that they were a woman-owned small business, but the owner and operator was the husband, not the wife. So there we have eligibility fraud, right? False statements to enter the program and stay in the program. But then we also have product substitution. So they were providing Chinese-made equipment when they knew that the cybersecurity vulnerabilities existed, and then they represented that they were made in the US. Now you see this as a real big problem in the defense contracts. You know, you provide a Chinese-made equipment that's going to go in one of your jet fighters, or you know what I mean? You could see some real big potential problems with product substitution cases. So in this case, they had to pay, let me see, they got 88 million in revenue, excuse me, and they had to pay, where is it? I thought I highlighted it. I'm sorry. We don't know yet. But the government froze 3 million in 12 bank accounts. But we don't know, because this was right like COVID time, so maybe they haven't been sentenced yet. Yeah. So anyway, there could be a lot of problems with this, but 4 of the individual defendants were charged with defrauding because of the woman-owned status. And then laundering proceeds, which I'll get in. Well, I don't know if I'll get into. If you guys want to know about money laundering, let's talk at the end. Here's another with flooring contractors. I think this is the flooring contractor. Nope, this is the office supply something. So he was sentenced to 33 months for multi-million-dollar office scheme. So he and another office supply company were both doing this, and he owned them both, I think. But anyway, he compared and got the cheaper products, but provided the more, but got paid for the more expensive items. So that was an interesting case. Okay, no, the bid rigging is the 2 competing. Sorry, I'm getting them confused. This is when 2 or more contractors agree in advance which firm will win the bid, and then they make it happen. They might do it by bid rotation. Okay, this time I'll get it, next time you can get it. So that you need to bid higher this time so that I can make sure I get it this time. And they might both be inflating their bids, correct? I mean, so pretty soon you're going to see such an escalation of costs. But bid rotation occurs, and it's oftentimes when there are less firms competing for that type of thing. So a 3rd firm or 4th firm might go, wait a minute, you're way overbidding here. Or what's going on with this relationship? We know you have too close of a relationship. By rotating it, it reduces the chance of seeing that the same bidder is always winning the contract. And then complementary bidding is pretty much, you weren't interested in this, but please bid on it, and then I'll give you a little bit of money for the time and effort to bid on it because I want to win it, but there needs to be competition or the contract won't go out in this manner. So that's a complementary bidding scheme. And this is where the commercial flooring contractor case comes in. I guess there's been a whole host of them, 2019, 2020, of flooring contractors, and they were engaged in this scheme and trying to put others out of business. And so they had to pay 1.4 million in fines and restitution, and others were also charged, and they were trying to put others out of business. So a very interesting case. And then here's one that you don't normally think of with contracting fraud, but it is still a fraud that happens, that could happen to contractors. You know, if they try to get a PPP loan or an economic injury disaster loan, or even a loan for real estate, 504 loan to get to build a commercial building and to house the business. There could be all reasons you get loan fraud or loans, excuse me. And then lots of ways to commit loan fraud. So false statements on a PPP loan, since it goes through a bank, you could have bank fraud, false statements on a loan application. That gives you a larger sentence and also can kick in money laundering as one of the charges. And then of course you got the false statements to the SBA for that, and wire fraud. Economic injury loan, false statements to SBA and wire fraud. Misuse of proceeds could be theft, could be bank and wire fraud, money laundering. And so what happens with money laundering, I will just kind of briefly say it. I've got a few more minutes. When you use the proceeds of a crime, of a specified unlawful activity like bank fraud, wire fraud, once you get the proceeds and you put them in your bank account and then you do a financial transaction with those proceeds, you are committing money laundering. So it's the purchase of the yacht, it's the purchase of the house, or it could just be paying bills. You're conducting a financial transaction with those proceeds. You are then laundering money. And so that bumps up your sentence. It increases a lot of things, the loss, everything. It allows for asset forfeiture. So there's a lot of problems associated with that. But what I want to point out here is for any of these things, when you make a statement to your lender, when you make a statement to your bonding company, to your regular insurance company, and you make a statement to the government, if you're ever under investigation, the government's going to get all of your prior statements. Maybe you made statements to a bankruptcy court in the past. They're going to get all of those and they're going to compare those statements and see which one you lied on. And so, and they'll try to prove which one is true, but oftentimes they'll just say, okay, did you lie to the bank or did you lie to the government? Choose one and then plead guilty to one or the other and all the relevant conduct gets in. And so that seems kind of callous, but really, again, it's that whole, when you're committing one kind of fraud, you're probably committing more. Not you who's here listening, but just keep that in mind if you guys discover fraud within the company or by your vendors or something, there's probably more going on than you realize. And here is where one of the ways the government can help prove more fraud, because they're going to get all these statements you've made in the past. Keep in mind, the FAR requires every contractor to disclose to an Office of Inspector General all credible evidence related to a government contract of violations of criminal law, Civil False Claims Act, or significant overpayments. And if you do not disclose that, you could be hit with more penalties, and it will show more of intent as opposed to it was an accident. So make sure you guys are disclosing to an OIG all credible evidence of fraud. One thing that the DOJ has been doing is if there is a corporate compliance program in place, they might have less of a sentence or less of a False Claims Act or civil case against you. If you have a corporate compliance program, if you were following it, if there was a clear message from the top that misconduct or fraud would not be tolerated, you have a hotline or tip line process in place, all these things will help reduce the amount you might have to pay the government if something happens. So it's really important for various reasons to have a corporate compliance program in place. And I got 2 minutes. What you can do: know your company and its operations. Small businesses, you have a better opportunity of actually knowing everything that's going on. Set up those internal controls to avoid fraud and catch weaknesses. Verify statements made to the government. Make sure you understand everything you're certifying to in those reps and certs. Ensure that you are. Don't let somebody else tell you what it means unless it's the government, and get it in writing and keep it. That's the other thing. Keep everything in writing. Verify phone calls by typing it up in email and sending it to them and saying, this is what I understand we talked about. Keep it in writing because your memory goes, as you saw earlier. And if a contract or government official approaches you for a bribe or kickback, contact your attorney and law enforcement right away, and we can probably catch them in the act, and that will prove that you had no involvement in it. And then disclose with your attorney any errors and violations of law so they can work for you to approach the government in the right way. So, questions? I know that's a whirlwind, and I'm sorry, it's like only 10 things. So anything that any questions? Let me stop sharing here. Here's my information. You can get it from Tiffany or Trina as well. But let me go ahead and stop sharing so we can talk more. Okay.
Yes, thank you. Trina, did you have any questions that you saw come in or from your own brain? If not, I have a couple.
No.
Okay, great. So we'll just take a few more minutes here, if you don't mind staying a little bit after the top of the hour. We know that a lot of times businesses will, they'll hop into these registrations and try to get them done as soon as they can, and they don't fully understand what they're clicking. And there's something in there about child labor, and there's something in there about size, number of employees. Anyway, and as PTAC counselors, we're trying to slow folks down to make sure that they understand what it is they're clicking, I guess. But what tips do you have for businesses that maybe don't have internal controls set up and did massively click a whole bunch of buttons on their registrations? How do they just reset, I guess, and make sure that they do a self-assessment to make sure they're all squared away?
No, it's a great question. I can help with how to set up more of a compliance program, or any certified fraud examiner can try to help you, or risk compliance manager can help you with that. But just making sure, setting up a program, hey, we have these checks and balances, and making sure people follow it is one of the primary things. Thinking about, the separation of duties that need to happen within, which will also allow you to have that double check of vendors that might be committing fraud against you and things like that, right? So it's really important to establish that right away. And as far as the reps and certs, the minute you notice something's wrong, you change it, and you might have to disclose to somebody, especially if you have a government contract already. Oh my gosh, I did not realize it, but work with your attorney because they're better at wording it to keep you out of trouble. But, if it's clearly an error, the government sees that, you may have to pay a fine, like a administrative or civil penalty, but it's far less than what you'd have to do if the government catches it and they prove that you actually had intent. So, if you catch a problem, do a, mea culpa is my recommendation, but talk to your attorney, but do a mea culpa and say, hey, I'm sorry, I made an error. I didn't realize that meant this and that, or that changed and I forgot to go back in and adjust that. Just, catching your mistakes, it more than every year, you should be probably going in and looking at your reps and certs to make sure they're accurate. Things do change, your size may change, the ownership may change, just different things may change, or it may just be that you just didn't understand the certification in the first place and now you do. So does that answer that?
Yeah, that's great. Thank you for that.
Okay.
Well, I want to thank you for your time and talent coming in to talk to us today. It's fun to have somebody that's been, a private business owner now, but also worked on the other side doing the investing.
Right. The other side.
Yeah. This is unmatched, I think, as in that respect. Trina, any last thoughts there? You're good.
No, this has been very, very enlightening, Kari. I really, really appreciate you coming and doing this, and I plan to recommend this recording to as many clients as I think is mature enough where this would be in their line of sight and should be a task worth visiting in their internal operations. So thank you.
Great, thank you, Trina. I appreciate that. If you guys have any questions, feel free to call anytime and I can help, guide you guys as well. You guys are great about advising me. So on the things I'm unaware of. So any fraud related questions, you or any of your participants or clients can call and we can talk about things. Yeah, anything you guys need, let me know.
Great.
Okay.
Good. Thank you so much. Appreciate it. Thanks for coming, everybody.
Thanks, everyone.
All right, bye.
Bye.